As 2022 comes to a close, India's marketplaces and airports are crowded, even though fears have arisen over the explosion of COVID cases in China and the possible fallout here. Festivals have been celebrated with pomp. Major sectors have recovered to pre-pandemic levels. It has been a year of recovery, in spite of the continuing geopolitical challenges that emerged at its start. In early December, the World Bank raised its gross domestic product growth forecast for India for the current financial year to 6.9% from 6.5%. At the time, it was the first upgrade of India's growth forecast by any multilateral agency or bank in FY23, and it came after a spate of earlier downgrades. In fact, the World Bank too had cut India's FY23 GDP forecast to 6.5% from 7.5% in October. According to the World Bank, India's economy has been remarkably resilient to the deteriorating external environment, and its strong macroeconomic fundamentals have placed it in good stead compared to other emerging market economies. At the latest Reserve Bank of India Monetary Policy Committee meeting this month, the GDP growth forecast for the current financial year saw a mild reduction to 6.8% from the earlier 7%. In its latest report, ratings agency Fitch retained its FY23 GDP forecast for India at 7%. Despite the movement in growth forecasts, India has emerged as a source of global economic stability and is still the fastest growing large economy. However, this does not mean that serious economic challenges did not emerge in 2022. Persistently high inflation was perhaps the biggest one. However, the retail inflation rate unexpectedly deaccelerated to an 11-month low in November. Data released by the National Statistical Office showed that the consumer price index-based inflation rate eased below the RBI's upper tolerance limit of 6% to 5.88% in November. The reason was a sharp moderation in food prices. It stood at 6.77% in October 2022 and 4.91% in November last year. Average inflation has remained above 6% for the past 3 consecutive quarters, constituting a failure on the RBI's part to meet its inflation mandate. On a worrisome note, core inflation, which excludes volatile food and fuel prices, inched up to 6.3% in November from 6.2% in October. In his latest monetary policy statement, RBI Governor Shaktikanta Das had expressed concern over sticky and elevated core inflation, adding that the battle against inflation was not over. There were other headwinds too. The rapid pace of monetary policy tightening in advanced economies resulted in large portfolio outflows and depreciation of the Indian rupee. Meanwhile, high global commodity prices led to a widening of the current account deficit. Against this backdrop, we spoke to economists to find out their assessment of India's economic performance in 2022.
The positive side has been the revival of contact-intensive services, which have been supporting the economy. The investment cycle also, I think there is no decisive pickup there, but the government investments did support, and in some areas, private investment also started looking up. We have recovered to the pre-pandemic levels. I think that is true, but I think we are definite. But despite that, I think we are still below the level where we would have been without the pandemic. So there is a permanent loss. The economy has been pushed back, and that is very difficult to recover. For that, it requires much faster GDP growth rate.
I'm not surprised that in FY22 we've had a recovery, because we were starting from a low base, and that low base has helped us to sustain growth to whatever it might turn out to be in the region of 6.5% to 7% in FY23. So to that extent, in overall terms, we've done okay. But we've done okay only on account of 2 engines of growth, while the other 2 engines of growth are not firing. The 2 engines of growth which were doing okay and which are already sputtering are exports, and the other one was government expenditure. And there are constraints on both.
If 2022 was a year of unforeseen challenges, the headwinds India is likely to face in 2023 have already been discussed across multiple forums at some length. In a panel discussion at the recent Business Standard BFSI Insight Summit, leading economists said that with a third of the global economy expected to slip into recession in calendar year 2023, the impact would be strongly felt on India's exports and trade economy. The panel comprised former Reserve Bank of India Executive Director and former Monetary Policy Committee member Mridul Sagar, State Bank of India Chief Economic Advisor Soumya Kanti Ghosh, Citibank India Chief Economist Samiran Chakrabarti, ICRA Chief Economist Aditi Nair, and IndusInd Bank Chief Economist Gaurav Kapoor. However, in a view that was echoed by his co-panelist, Sagar said that even if India's growth were to slow down, it could still grow around 6% next year. The World Bank has also warned that India will not be insulated from spillovers from the US, Europe, and China. As a result, its India GDP growth forecast for FY24 has been cut to 6.6% from the earlier 7%. At its latest meeting, the RBI MPC retained its inflation forecast at 5% for the first quarter of the next financial year and made a projection of 5.4% for the second. For the first quarter of the next financial year, GDP growth was projected at 7.1% against the MPC's earlier projection of 7.2%. GDP growth in the second quarter was projected at 5.9%. Against this backdrop, what do leading economists have to say about how the Indian economy will perform in the coming calendar and financial year? And what are their expectations from the budget?
I think our forecast for 23-24 is GDP at 6%. The year 23-24 will be the test of resilience of the domestic economy. And here I think the key drivers, according to me, will be one, the government support to the investment cycle. So what I mean by that is we expect the budget to be focused on infrastructure investments. So that will be one engine of support. The second will be the private investment has started ticking, but in the uncertain environment, you cannot expect a full revival. Here I see the government playing a role in providing support via increased support to the schemes like PLI, which will trigger the private sector to invest in an uncertain environment, so to say. So I think that's the limited part the budget can play.
The budget has to make sure that it comes up with a package which enables job growth to happen, because if job growth happens, then wages will rise. And if wages rise and job growth both happen together in the non-farm sector, workers are pulled out of agriculture, private final consumption expenditure, including in rural areas, will rise. And when that begins to rise, private investment should kick in. So my fear is that we shouldn't expect too much out in either FY23 in terms of growth, much better than 6.5%, and perhaps even remaining there if that in FY24.
2022 has taught Indian policymakers a crucial lesson. Amid a dynamic global environment, headwinds can emerge from unforeseen quarters. While some of 2023's economic challenges have already been identified, there's no certainty that more won't emerge. The coming year could very well test India's economic resilience even further.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.